Um, there's no power here, so I guess we have to pardon the darkness. Let's see, it is better. The solar just went off. This is this is nice enough. All right, so let's just continue from where we left off. All right, like I said, like I said, okay, pointed out earlier that we would need to see pattern. We need to see pattern that shows us that okay, price is willing to, buy. That's when we then take any form of buys. That's when we then take any form of buys. And you all know what we like to see at this point. You know what we want to see. We want to see is for the risky setup is a sweep, a pullback, perhaps in reconstructure. That is we hoping that the reconstructure would happen. So like I said, this is risky. This is risky. This is risky. This is very risky actually. This is risky. A sweep. Now see the pullback. Now comes back. Closes here. It starts to rally up. Understand? This is risky, but the one we like to take something like this. That this is for a bearish a trend we want to buy. Yes, we want to buy and price is crashing. See it come down, sweep the low of the range you want to trade, a pullback, a sweep of the candle that sweeps the low of the range we want to trade, a sweep, then a pullback, right? Now, then changing market structure, break on structure, pullback, then we follow it to the opposite side of the range. This is what we would like. This is what we would like to see. This is what we would like to see. So now, this is the low of a range. Let's go back to the 4 hours. We can see that this is the low of a range and price has swept the low of a range. So basically, this is the low of a range and price has swept it. There's been a sweep of the sweep. There's even been a lot of sweeps, in fact. So now, if we see a situation where as price comes down and has done the sweep, we see a pullback, we see a sweep, then we see a pullback, then a change of structure. There's a change of structure character, I mean market structure shift, whatever it is. A shift, a shift of a change in behavior, right? Like now, because this is coming from an high, a low, a lower high, a lower low, a lower high, it now creates an higher low and higher high, then pulls back, take the trade, follow to the opposite trade. At this point, we'll be using anything we see, an FVG, a fair value, an FVG, a fair value gap, OB, anything. If it's a fair value gap before an OB, we'll probably use the fair value gap to follow the trade to the opposite side of the range, that kind of thing. But we have to see something. We have to see something. For instance, now look at here, look at here. Sorry. Okay. Oh no. This is oh, okay, okay, okay. It's chill. I prefer that. I prefer the white. There's nothing inside. Yeah. So that was I said, look at this. Look at this. Look at this. Look at this scenario. For instance, now, it's coming from I. There was a sweep. Sorry. Yeah. It's coming up. There's a sweep, right? There's after a sweep. It's after a sweep. Pull back. So now you see it's pulled back. If this, if this crash is coming, let's say that I marked out this low. If it stalls, like if it stalls around here, then it starts to go back from here. We see break of structure. Nice. Wait for it to come back. If it comes back, I will follow it to the opposite side of the range. This. You can take a trade with 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 if we see a pattern like this. You can hear now. Where is it coming from? Where is it coming from? This was a huge low back. A sweep of that low. A pullback. Pullback. If price does not sweep this low, I say it stalls, then there's a break of structure. Then you pull back, will buy with anything that is here, maybe a fair value gap or an order block that is around this place. Then follow it. And that's the opposite side of the range. So what we're looking out for, but as it is, it seems like price is going to sweep this low. Just if it doesn't sweep this low. If it doesn't sweep this low, say it stalls, then pulls back, takes up this high, because this is a high, takes up this high, stalls, takes out this high, it stalls there, it stalls here, it starts to pull back from here, comes here, takes out this high. Then when you pull back, we're just going to take the trade with a fair value gap or another block. We'll take the trade and follow. We'll just take the buy and close our eyes. We close our eyes and take the buy. So it's now does something like pulls back after breaking, like breakout, not fake out, a breakout. A breakout pull back. We use this fair value gap or we use the fair value gap or OB, put a sell here. So a trade is going to look something like say we used the fair value gap, put a sell here, just to be safe. We could put a sell here. We could put SL here. I mean, you could put SL. You could put SL here. You could put SL here. You could put SL here because I mean, it has changed character, right? And has broken out at this point. So it pulls back. You can put SL below here. You can put SL below here because if after that it comes to sweep this place, we might be seeing something new because a sweep is nothing stopping it from coming to come and sweep here. So put SL below here and watch and put TP at the opposite side of the range. This is not the opposite side of the range. The opposite side of the range is very high up, but there will be a lot of stress to want to be tracking it out. Put TP at the opposite side of the range and then leave it and let it run. Let it do its thing. That is if because look at this liquidity hungry. This hungry man. This hungry man just chewing everybody out. Come inside. That is one chewing everybody out. At this side. Down here. Just chew. So if I start stored here, if we see a push that breaks this high, let's set the price alert for it. Okay.